The pandemic lows in the markets, like the S&P, I don't know, what's your marker for the pandemic low? 2,300, somewhere around there?
Oh gosh, well, I don't expect anything of that nature.
No, I know, but why? Why do we go? Why do we double during the biggest global health scare in 100 years? What about the Nasdaq? The Nasdaq was a beneficiary of a lot of stimulus from both the Fed and from what we did with, for the pandemic, all the fiscal measures that we took. Is that what you attribute the move in the Nasdaq to? We loved all those stocks, the ones that were doing well as we were closed down. Mm-hmm. Is it all just easy money? Is it all played forward? How much of it do we give back on the Nasdaq?
Well, a sizable retracement would be 61.8% of Fibonacci level of these up moves. So that would put us at that 3,200 level for the S&P and about 10,600 for the Nasdaq 100. And the charts will never answer the question why something happened, but we did see outperformance from the mega caps, so the old sort of FANG plus Microsoft and Tesla complex. And when they started to lag, that's when we felt it was problematic for the market, because then we started to see breadth deteriorate, meaning market participation, just wasn't where it used to be. So that was indicative of the reversal, of course, that we've already seen. Now it's a matter of just trying to determine when risk is now on our side. And unfortunately, we don't have that at this stage. And this morning, we see Bitcoin having broken down from its consolidation phase. And of course, it's much more dramatic on that front. You have risk assets more broadly around the world reacting here too. So when you see that kind of collective global minor breakdown, we take issue with that as something that tells us to be, reduced in our exposure, broadly speaking.
What's the technical outlook now? What are the support levels for Bitcoin?
Unfortunately, so the 27,200 looks like it's being broken decisively. So the next support is roughly 19,500. And I know it feels like a big gap to that level, but that's sort of the nature of these higher beta asset classes. And below that, we have a Fibonacci retracement level of roughly 18,300. So we're putting next support in that sort of wide range, 18,300 to 19,500 for Bitcoin. And we do think it's doable as part of this cycle. And it would be a natural place for a bottom to be discovered.
Would that be a bottom that would hold up?
I think so. And I say that just solely based on the indicators that we track. So if you look at long-term overbought, oversold measures, they're at that point where they should be coming off of a long-term oversold reading.
How about the 10-year got to 3.25 pretty quick? What's your ultimate objective there?
It is a resistance level from 2018. So we've been expecting backing and filling. That's based in part on the DeMark indicators. So that would just suggest we see more chop, but that means short-term volatility, both to the upside like we're seeing and also to the downside at times. So we're looking for more of a neutral bias unfolding here. And yet, if we do see a decisive breakout, we'd respect that. That would occur on a couple of decisive weekly closes above that 3.25 level. And that would put the next resistance around 4%. And that's going back to the 2009 highs.